I'm Emily Cheng, and this is Bloomberg Technology. Coming up, Google searches for answers and an appropriate response after getting slapped with the biggest antitrust fine in EU history. The price it has to pay and the deadline on tap to level the playing field. Plus, the cyber strike crippling systems across Russia, Europe, and the U.S. McAfee CEO Chris Young joins us with his take on the latest ransomware and how to contain the spread. And Microsoft continues its thinking inside the box with an announcement today on expanding its partnership with the file sharer in the cloud. Box CEO Levie breaks down the tie-up. First to our lead. A cyber attack is spreading across the globe today, hitting dozens of companies and some government agencies, port operators in New York and Rotterdam, government systems in Kiev, and companies like Rosneft, advertiser WPP, and Maersk have all been victims. The strikes follow the global ransomware assault involving the WannaCry virus. You'll remember last month's attack affecting hundreds of thousands of computers in more than 150 countries. Joining us now from the latest in London is Caroline Hyde. And Caroline, what do we know right now about the spread?
Emily, quite amazing. You're saying there, from chocolate to oil to central banks being affected by this. At least 80 companies have been hit in Ukraine and Russia. This seems to have been the epicenter of where this all started. And then it started to leach out into Europe, into the United States. You're mentioning US. Mondelez is one of the companies hit there, and Merck, one of the big pharmaceuticals companies, so has come as far as the United States as well. At least 2,000 networks have been hit, users have been hit. And as you mentioned, it's very similar to the WannaCry ransomware. It's not as prevalent. That was what, some 200,000 computers affected, 150 countries. But very similarly, the computer you find is shut down and suddenly you're demanded for $300 worth of cryptocurrencies if you want to be able to access your computer once again. Now, we know Europol is now involved. Emily, this is basically the International Police Service. They're investigating. And so clearly they're just trying to lock down the spread. Once again, it seems to be something exploiting the weakness of a Microsoft operating system.
All right, Caroline, hang on a second. Another big story out today, a record antitrust fine by the European Union as it issues the first penalty in a 7-year investigation of Google's dominance in shopping search advertising. The EU slapped Google with a $2.7 billion fine for abusing comparison shopping search results. Now, Google has 90 days to stop favoring its own service or face more sanctions. The regulator at the heart of this battle, EU Competition Commissioner Margrethe Vestager, spoke to Bloomberg Television and laid out all of the evidence against the company.
What we have found and studied intensively, I think with 5.2 terabytes of data, is that there is a very close relationship between visibility and traffic and revenue. So what you see is that Google have taken an advantage for its own shopping comparison on the cost of its rivals, and being able to do so by misusing the dominant position in general search. And that is, of course, the key of the case, that we have found Google to be dominant. And with dominance, of course, comes a special responsibility to compete on the merits.
Bloomberg's Caroline Hyde back with us from London with one of the very first people to sue Google on these grounds in Europe. Caroline?
Yeah, I'm very pleased to say that we're now joined by Richard Stables. He is the CEO of Kelkoo, a company that has been hit by the allegations, of course, that Google has in some way been skewing the price comparison services in order and therefore exerting their dominance. You were a price comparison company. Tell us how your business was affected when Google started to enter this particular area.
Sure. So Kelkoo basically started in '99, and it grew up to be probably the leading price comparison site in Europe. It was the dominant. It was we were in 7 out of the 10 countries. We were the leading price comparison site, doing really well. Everybody heard of us. We were well known in the UK, and then, you know, Google basically decided around 2005 or 6 that suddenly these vertical search players, these shopping price comparison sites, were a threat. And they started to systematically figure out how they were going to take us on. And what they decided to do was they were going to go to merchants and say to them, give us your feeds, give us everything from you, and we will send you traffic for free. First, we weren't worried. And then a series of algorithms hit in 2011, and our traffic literally fell off a cliff.
By how much?
So since 2011, we've lost 95% of our traffic that's come from Google. And we're not the only ones. I don't know of a single price comparison site that hasn't either been smashed to the tune of 90 or 95%, or at least 60 or 70%. And there's bodies littered all over the place. And they're not just talking about European price comparison sites. We're talking about American companies here as well.
So when you hear the allegation that potentially, Margaret, yes, Vessier, once again, the EU is being too tough on big US giants, what do you say?
I think that's absolute rubbish. I think she's got the decision today absolutely right. I think that Google will try and make this out to be USA versus Europe. They'll try to say it's the big old bad commission. That's absolute rubbish. It's all about Google hurting consumers, and the commissioner has done a fantastic job today. Consumers? By removing competition in the marketplace, you've essentially you're raising prices because merchants have nowhere else to get traffic from. So they're basically the only place they can really go to is Google. And the price goes up. You've got no competition, you've got no innovation. So back to your question about why is this not a US versus Europe thing, there are numbers of CEOs who've come out yesterday saying they support the commissioner. We're talking about CEOs of Oracle, Getty Images, News Corp. There are lots and lots of companies in America who have been impacted by Google and are very, very happy to see this decision today.
What can Google now do to rectify the situation, in your point of view?
So Google, as the Commissioner said, has been given 90 days to come up with a proper fix to this market. And they'll come back within 60 days. And I think the right thing to do is to turn around and say, look, if we're preferencing our own systems at the top of Google, then we've got to give some of that real estate to the other players. So that's one of the things. But Google are facing much bigger implications here, because this is a watershed moment. This is the first time that somebody, a big authority, has come out and said, Google, you've broken the law. Your core values are not what you hold them up to be. The do no evil, the sanctity of your search is in question, totally in question. And you put profit ahead of what's good for consumers. And frankly, they're going to have to change their business, not just in shopping, but in things like travel, in local, in news, in maps. This is a potential decision that can impact right across the EU, but also in the wider world. What
about your own lawsuit? What was it, 2015, when you first came and said, Google, you owe us? Are you likely to get money back now? Are you likely to pursue that legal investigation now that the EU has ruled?
So I can't talk specifically about the case, but what I will say is the following, is that it is a case following on from an EU decision, and we will definitely be pursuing that with a vengeance now that this decision has come through. And you know, we went to Google and said, look, you've done wrong. This is some of the evidence that, and certainly the EU case was part of that. And we will have our time in court. We will not be the only ones, though. There will be a lot of other players out there who are going to go after Google, a lot.
Richard Stables, I can't thank you enough for whisking yourself from Brussels to London for us tonight to join us to discuss everything like that. This, of course, was Richard Stables, Kelkoo CEO. Emily, to you in the studio.
All right, thanks, Caroline. We're going to talk a little bit more about how this affects Google later on in the show. I do want to take a look at Alphabet shares falling to their lowest level in 6 weeks. Alphabet has now fallen in 3 of the last 4 trading sessions. That helped drag down the NASDAQ, which fell more than 1.5% today. The benchmark index is on pace for its worst month since October and is set to snap its 7-month winning streak. The NASDAQ has been up for 10 out of the last 11 months. Coming up, a new cyber attack is making its way across Russia, Europe, and now the U.S. This just 1 month after the WannaCry ransomware attack. Chris Young, the CEO of McAfee, will be joining us. And Bloomberg Tech is live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. A status update from Mark Zuckerberg. Facebook now has 2 billion users, making it the first social network to connect that many people. By comparison, Google's YouTube recently announced it has 1.5 billion users, while Facebook's Instagram has 700 million. Zuckerberg said this week that Facebook's new mission is to bring the world closer together. Now back to our top story. Dozens of companies and government agencies falling victim to yet another ransomware hack attack, including the likes of the ad company WPP, shipping company Maersk, and pharma giant Merck. More than 80 companies in Russia and Ukraine were initially struck by the Petya virus that disabled computers and told users to pay $300 in cryptocurrency to unlock them. Cybersecurity stocks took a hit on the news. Palo Alto Networks, FireEye, and Symantec all closing down. Joining us now, McAfee CEO Chris Young. So, Chris, your researchers have been looking into this. What have you discovered?
So we've discovered the real story here is the evolution of ransomware. We did see a global ransomware attack, but the way we've seen this attack work is we've gone from single instances where users would get phished to now you've got hybrid attacks where this exploit, this ransomware attack used an exploit that we saw in the WannaCry attack a few weeks ago, but is now using different types of exploits to go after user credentials and even attack machines that aren't necessarily unpatched, which was the case in WannaCry. So we're now seeing the evolution of ransomware where they're trying to move from individuals they go after to really trying to infect entire networks. And that's what we started to see with WannaCry, and we're seeing the next step of the evolution here with Petya.
So in this very moment, what should companies be doing to protect themselves?
So the number one thing they can do is make sure that they're patching the vulnerabilities that they've been alerted to in their environments. Second thing they need to be doing is making sure that they're updating all of their cybersecurity defenses. So make sure they've got the latest versions of the cybersecurity software working. Make sure they've got adequate monitoring and alerting capabilities in their organization. Make sure that they've got a users alert on the alert for these kinds of attacks as well. Users can be a really good, important source of intelligence when these kinds of attacks happen.
Why are ransomware attacks becoming so popular among hackers?
We believe it's a few reasons. Number one, there is an opportunity in this case for the ransomware attackers to monetize the attack in different ways than we've traditionally seen when they used to just go after stealing sensitive information. In this case, they don't actually have to steal any information. They can simply propagate their malware and look to receive payment in order to allow the user to move forward in using their machine. But we also believe that what we're starting to see here with WannaCry as well as with Petya is a move to try to test what's possible, and that perhaps they're looking for a bigger prize down the line by infecting entire organizations whose operations can be disrupted by these kinds of attacks. So we don't think we've seen the end of the movie here. We think we're just starting to see the beginning chapters of the movie.
Well, goodness then, how does the movie progress and how does the movie end?
I never like to try to predict the ending of a movie, but I can tell you this. We do expect to see more attacks like this. We do expect that the ransomware purveyors will try to use other forms of propagation, use other forms of stealing credentials, which is what we're starting to see here in Petya versus what we saw with WannaCry. And so we expect that they're going to test different methodologies and see which combinations work best for them, and then ultimately seek to monetize themselves. In this particular case, for example, many of the Bitcoin wallets were hard-coded into the software itself, and we've only seen small amounts, less than $50,000 worth of payments go into those Bitcoin accounts so far. So we expect to see this continue to evolve, but again, we believe this is something that's just beginning, and that we've got a lot more of these kinds of attacks that we'll experience over the course of the coming really months and into the next few years even.
So what do you think is driving these cybersecurity stocks down, whether it's Symantec or FireEye or Checkpoint?
I have the luxury of being a privately held company, so I'm not focused on stock price. But what I think we really are seeing here is a call to action for the industry. Those who are cybersecurity practitioners, you've got to move to the next generation capability of cybersecurity products that are out there. A lot of our newer technologies were kind of at the front and center of being able to detect and stop these kinds of attacks. Patching continues to be a very, very important part of not only good IT hygiene, but good cybersecurity hygiene. And as I mentioned a little bit earlier, users are important. Users tend to see these things early, and they can be a really, really important source of early warning when your organization may be vulnerable to an attack. So a holistic cybersecurity program, working closely with vendors, working closely with employees, and really driving a full life cycle approach is what's very important for anyone who's responsible for protecting their organization.
All right, Chris Young, CEO of McAfee there, joining us from Santa Clara. Thanks so much. Coming up now, as competition in the cloud heats up, Microsoft and Box are expanding their partnership. We'll get the details from Box CEO Aaron Levie next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, in the U.S. on SiriusXM. This is Bloomberg. In partnership news, Microsoft and Box are expanding their deal to reach more large corporate customers with a file sharing and storage service. Customers will now be able to store their data in Microsoft's Azure cloud platform. The partnership will allow for future integration between Azure's artificial intelligence and machine learning capabilities with Box's cloud content management platform. I spoke with Box CEO Aaron Levie earlier and asked what kind of customer demand he's expecting from this deal.
If you look at our customer base, which is about 74,000 companies globally, including 64% of the Fortune 500, Microsoft is in, with their cloud services, in about 90% of the Fortune 500 or more. And so there's already a lot of significant overlap between our customer base and their customer base in the cloud. And we're hearing from more and more of our customers that they want to be able to leverage some of the more advanced capabilities that Azure is building and be able to have things like their data stored in more locations around the world. And that's our Box Zones technology that lets customers do that.
Now, I know you may consider using Microsoft's AI services. How would that work?
Yeah, so if you think about all the content and information that we have in Box, there's billions and billions of files, and in every one of those files are different insights and different knowledge and information. And really, the only way to extract that knowledge or information is by using some amount of advanced technology, whether that's artificial intelligence or more advanced machine learning capabilities. So things like being able to upload a video of this conversation and make it fully searchable and be able to have various tags of different content that was discussed, being able to upload audio and make that completely searchable, be able to summarize documents, be able to translate documents and text. So all of those kind of capabilities are becoming more and more readily available via Microsoft and others. And we want to ensure those capabilities are plugged into Box so our customers now can have the most intelligent way to manage and share and organize all of their content.
There's a lot of activity right now happening in cryptocurrencies, and cryptocurrency believers believe that the blockchain will one day make cloud providers obsolete, and that all of the cloud essentially will be peer-to-peer. How do you think about this?
That would really be bad news for us if that happens. So, so certainly, we're more in favor of the cloud model. We think that peer-to-peer has been tried a number of times over the years in different capacities, and obviously, I think from an academic standpoint, it's incredibly exciting the possibility that you could have with a completely distributed network of systems and computers that could power all of the various services that we use. But there's also a lot of practical limitations between security, between reliability. That the cloud is awfully good at this point.
What regions do you expect Box Zones to expand using Azure?
Yeah, so right now it's in 8 regions globally in some of the key markets where we have a lot of customer demand. But our current customer demand in terms of where Box is being used and where customers are trained to take Box certainly exceed the 8 regions that we're in right now. So I think you can imagine us in places like South America, where we're seeing more and more traction over time, more locations in Canada, the ability to spread throughout Europe. So and then broadly in Asia, long term, we're pretty excited about the possibility of entering China. and some of the growth prospects there. So a bunch of new markets over the coming years that we're paying attention to, and we're certainly going to need to have infrastructure in those locations. And our strong preference is that we don't build that infrastructure ourselves, but we can leverage partnerships like Amazon and IBM and Microsoft and others to be able to deliver that technology to our customers.
How do you intend to navigate regulatory and censorship issues in China specifically?
Yeah, this is why it's still a pretty early conversation, but you know, we think that there are different entry strategies that companies have been successful with. Obviously, joint ventures on the ground, being able to have isolated versions of your product. We're fortunate where the type of content that goes into Box is not the same kind of content that you generally see from a Facebook or a Google as having issues globally with. It's much more corporate information. We already have a lot of customers that use Box globally and including in China for global manufacturing processes and their global distribution networks. So our job would just be to make sure that customers can use a very, very secure, highly private version of Box in any country that they choose, including China. And we would only enter the market when we felt comfortable that we could provide that kind of service.
Box CEO Aaron Levie there. And coming up, our exclusive conversation with Forerunner Ventures founder and managing director Kirsten Green, her outlook on the e-commerce sector as consolidation heats up. This is Bloomberg.
I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Let's start with a check of your first word news. President Trump says if the health care bill fails to pass in the Senate, he won't like it, but that's okay. He today at a gathering of Senate Republicans after the GOP shelved a vote on their replacement bill until next month. Trump says while it would be good to get it done, he'll understand it if they don't. The U.S. has demoted China to its lowest ranking over its human trafficking record. It's in the same category now as North Korea, Zimbabwe, and Syria. Secretary of State Rex Tillerson, along with senior White House advisor Ivanka Trump, unveiled the annual report on trafficking today, saying there are roughly 20 million victims around the globe. Britain's Treasury Secretary says his country wants to keep its economy anchored in the European mainstream as it leaves the EU. Philip Hammond stressed the need to avoid a, quote, disruptive and dangerous cliff edge as Britain negotiates its departure. Scottish First Minister Nicola Sturgeon is delaying plans for a second independence referendum after voters turned away from her party in the UK general election. Sturgeon says she's rethinking the plan, but wouldn't rule out a referendum in the coming years. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. It's just after 5:30 p.m. Tuesday here in Washington, 7:30 Wednesday morning now in Sydney. We're joined by Bloomberg's Paul Allen with a look at the markets. Paul, we saw a sell-off here in the States late in the day.
Yeah, it's not expected to impact the open here in Australia too much. We've only got futures off by about 2 points right now, so it's all been pretty calm on the local market at the moment. Nikkei futures looking kind of mixed. Keep an eye on Toshiba today. The AGM will be held at Toshiba today. We're not expecting any update on these delayed earnings. However, we might have a little bit of news on the sale of the chip unit. The self-imposed deadline to finalise that deal is today between Bain Capital and Inkjay. The details still being worked out. And of course on Tuesday there was an updated bid from Western Digital and KKR. So Toshiba one to watch. Also keep an eye on the broader Hong Kong index, the Hang Seng. There was a sudden plunge in 17 stocks late yesterday, mostly on the growth enterprise market. And if you have a look at the chart, you can see the divergence there between the main index and the GEM index. Some of those stocks off 90%, including China Cheng. Some traders see a link with a broker that's under regulatory investigation. Also keep an eye on WEF in China. A few more interesting speeches out of there today. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
Emily Cheng, and this is Bloomberg Technology. Let's get back to our top story. Google losing its biggest regulatory battle yet, receiving a record fine from the European Union enforcers who say the search engine giant abused its dominance to muscle out smaller shopping search rivals. Shares of Alphabet have declined in the last 2 sessions. For more on what is next for Google, let's go to our Bloomberg Tech editor, Alistair Barr. So, Alistair, what are next steps for Google right now?
It's all about damage control now for Google. So the main lawyer at Google said that the company is considering appealing. He hasn't even said they're actually going to appeal yet. And then the other steps they're going to take, they have 60 days to show the European competition chief that they're actually working on a fix, working on something that will appease her demands. And then after 90 days, that they have to have that ready to go. So that's not a very long time to potentially completely change their search engine.
This could have a bigger impact, a much longer term impact on how Alphabet and Google do business. Talk about the broader implications here.
Well, broadly speaking, Google really has never had to change the way it does its search engine for regulators or really anyone else. It's always decided over the last 18, 19 years how to do that. So this is really the first time where it's going to have to change something, and it gets both very specific and very broad. So there's this shopping price comparison service they have. They may have to let other price comparison services in Europe show up alongside those results. So that's kind of a pretty specific change. That's a big business for them. But more broadly, there are these other vertical search areas like travel and local searches where the European Union could use today's ruling as a template and get Google to change things all over again, maybe in a year's time or 6 months' time.
And this could be just the beginning for Google. Talk to us about the road ahead when it comes to the investigation related to Android.
Yeah, so Investigator today mentioned Android a little bit. That's one of 2 other broader investigations that the EU is looking at, the other ones to do with its advertising platform. The Android one is arguably the most important one. One analyst who we spoke to today said that, acquiescing on the shopping front is pretty small compared to what the company could in theory have to do with Android, which is basically take all of its Google services that are pre-installed on Android phones around the world and just basically get rid of them and allow phone makers like Samsung and LG to basically put any services they want on these phones.
All right, Alistair Barr, our Bloomberg Tech editor. I know you're going to stay on this story. Thank you so much for that update. Now, online retail is expected to grow 8 to 12% in 2017, according to the National Retail Federation. That's up to 3 times higher than the growth rate of retail overall. One person that knows a thing or two about this sector is Kirsten, who has made her name by investing in a couple of e-commerce unicorns, including Dollar Shave Club and Jet.com, 2 of the biggest e-commerce exits in the last few years. Green founded the venture capital firm Forerunner Ventures, which also counts Bonobos and Birchbox among its portfolio companies. Joining me now in an exclusive interview, Forerunner Ventures founder and managing director, Kirsten. Kirsten, great to have you on the show.
Thanks, Emily,
for the first time.
Me.
So you spent years as a retail analyst and decided very early on that e-commerce was where it was going to happen. You were going into malls, you were doing research on foot traffic, and you crystallized this investment thesis. What was that thesis that you started out with?
It's that the consumer's path to purchase is really being completely reimagined. And a large part of that is being driven by digital attribution, digital technologies that everyone's adopting, and I think that's really shaking up the landscape.
So you invested in Jet, which sold to Walmart for $3 billion, Bonobos, which just also sold to Walmart, Dollar Shave, which sold to Unilever. What did you see in those companies early on?
I think actually, most of the things that we're investing in have a root business in selling discretionary items. And a lot of the path to purchase around discretionary spending has to do with engagement, experience, and bringing something to life that has some element of entertainment or connecting personally to a customer. So in each of those instances, I think we felt like the founding team had a unique take on the consumer, on how things were shifting in the ecosystem, on how they could use technology to give a better experience. and really a better business model too. I mean, I think the backbone behind a lot of the companies we're investing in are what's the platform that they're building off of, how are they creating a better experience and a better business model leveraging technology.
So we've seen spectacular successes in e-commerce, but also spectacular failures. I'm thinking of Fab.com. What are we going to see more of?
I mean, e-commerce, or commerce speaking, is a hard category, like many areas of business are, and I think that there are success stories and there are failures. And I guess if I had to try to understand like some of the core differences between the companies that fall into each of those buckets, I would lean on the fact of experience, like on how close in touch they are with the consumer, how much of the core offering and the core service proposition is really supporting the product that they're eventually selling or the consumer that they're addressing.
Amazon is making a big bet on Whole Foods, surprising a lot of people. They're getting into clothing. How do you know what Amazon is and isn't going to do? Because you don't necessarily want Amazon as your competitor, right?
I think you have to, I mean, we just operate in a world where Amazon is a formidable competitor. We assume that they're thinking about how to address the consumer very holistically from every angle, and try to understand, are there opportunities to play off of that strength that they have? They really are an aggregator of demand. And is there an opportunity for a company to use that as much as, not for it to just be a competitor, but is there a way that they can play in that ecosystem too?
Then you have, some of the biggest online players, including Amazon, moving into brick and mortar. Amazon's opening stores, Bonobos has stores. Warby Parker. Why is that?
There's been a lot of conversation for a handful of years about omnichannel, the importance of omnichannel. I think we're just starting to see it play out, really. It's not about having a couple of stores and having an online site, but it's really about thinking, again, about that customer's path to purchase, about where are all the ways in which she or he might expect to interact with your brand, your product, your offering. And the reality is the consumer is everywhere, and the consumer wants what the consumer wants when they want it. And to really build a big business and to meet that demand, you need to think about how you meet the consumer in all those different places. And sometimes that means you do transactions online and experience offline, and sometimes it's the reverse and everything in between.
So what's the next big thing for Kirsten Green? I mean, where are you looking for the next wave?
We're grounded, I think, in the idea of like who is building a better model for bringing these businesses to life. So much of the consumer ecosystem and how they make decisions have changed. That's really impacted the power of a product, the power of a brand. I think it's gotten a lot more complicated. It's no longer, we really think about having a great product and having a value proposition as table stakes. And really to get the win is to have that plus a great service. And a lot of that has to do with kind of helping them filter through the clutter, being convenient, being personalized, increasing. And many businesses are on stages of meeting those demands, but there's still a lot of opportunity to meet those.
Now, we've been covering the story of Justin Caldbeck, venture capitalist. 6 women have come forward to the information alleging sexual misconduct. He has resigned from Binary Capital, a firm that he co-founded. LPs are now trying to decide what to do. His partner, Jonathan Teo, is trying to save the fund. What is your reaction to this story?
It's unacceptable behavior. And I'd like to think there's no room for that in our sector of business, or really any sector of business. It's just completely inappropriate to make anybody feel like they're in a situation like that.
LPs are deciding what to do. What should they do?
I think a lot of this business has to do with your character, your judgment, how you're diligencing people, how you're building relationships. And unfortunately, I think that they fell down on a lot of those aspects. Mm-hmm. So I think our investors look to us to have high standards of diligence, high standards of character, of partnership building. And if we don't, it's hard to be successful in the business. So I think it's a challenge for them right now.
Reid Hoffman is asking investors to sign this decency pledge, talking about third-party oversight of the interactions between VCs and entrepreneurs. Is that enough?
Whatever it takes to keep moving things forward. These brave women coming out and bringing the situation to light and starting a dialogue about it, and people finding what their own gut reactions are to it and finding ways to express anger, frustration, distrust, or not wanting, or ensuring that they're not behaving that way or their colleagues aren't behaving that way is an important, all important steps in the right direction. And the decency pledge gives people something to kind of point to or to hold on to and make it a little bit of a movement in that regard. And I think that's positive.
How should other investors and entrepreneurs decide who to do business with and who not to do business with?
again, it's a people-driven business, and I think, we make a lot of decisions about what do we think, fits into our thesis, and where do we think the big opportunities is, and who are we going to be in business with, and what is the chemistry and the makeup and the potential for us to be good partners. And we think about that every step of the way when we bring new team members onto the company or when we bring new investors onto the company. It's one of the parts of the business I like the most. It is really a collaborative business.
A lot has been made about how hard Silicon Valley can be for women.
Yeah.
How do we make the Valley better for women?
We gotta have more women out there doing business. We gotta have more people embracing it. I feel like this year the media has been good to me in talking about some successes. I think that's important. Hopefully that serves as a role model or inspiration. And just, keep working to make that happen.
All right, Kirsten Green, founder and managing director of Forerunner Ventures. Great to have you here on the show for the first time. Thanks so much for stopping by. All right, well, cryptocurrencies had a stuffed start to the week. We will dig into what caused the drop in both Bitcoin and Ethereum and what is next for the emerging currency. That is next. This is Bloomberg. Returning now to one of our top stories, the new cyber attack today spread from Europe to the U.S., with one group saying about 2,000 users were attacked. The virus disabled computers and told users to pay $300 in cryptocurrency to unlock them. This news added to recent pressure on the price of digital currencies like Bitcoin, which has fallen more than 10% this week. Now, to one of Bitcoin's top competitors, Ethereum is also having a hard start to the week. The cryptocurrency plunged more than 20% in Monday trading, the drop coming on the heels of last week's flash crash when the digital currency tumbled from over $300 to 10 cents in a matter of minutes on Coinbase's GDAX exchange. I sat down with Olaf Carlson-Wee, founder and CEO of Polychain Capital, a hedge fund that invests in digital currencies, including Ethereum, and started by asking about the flash crash that caught traders by surprise.
Last week on a private exchange, GDAX, this is actually my former employer, on the Ethereum to US dollars order book, there was effectively a massive market sell followed by a series of margin calls, which actually close out margin positions and force people to sell. So it was a cascade of sell orders, which actually ate through the entire buy side of the order book and pushed the price down to about 10 cents. Now, this was only in the one order book on the one exchange, so pretty quickly the price kind of reached back to where it is trading on other exchanges, but it was a flash crash last week.
And yet we're seeing more volatility continuing. Why is that?
So I think it's important to paint the backdrop of how this volatility is occurring. So at the beginning of this year, Bitcoin was trading for around $1,000, Ethereum for around $10. These are now trading for about $2,400 and about $240 respectively. So although we have seen a short-term pullback on those prices, I do think that the long-term trend here is very strong, and it's very clearly up and to the right.
That said, Fred Wilson, Union Square Ventures, says, my gut says we are headed for a sell-off in the crypto sector, but honestly, I don't really care. I will keep buying into this correction or rally, whatever it turns out to be, because the more important question is where these assets will be in 5 or 10 years.
Yeah, I would fully agree with Fred there. When you think about this as a technologist, we're really seeing the early innings of a massive breakthrough technology that is far from mainstream right now. So I do think there is still massive opportunity here despite short-term volatility.
That said, it's pretty scary that the value could go to zero in a matter of minutes.
Well, so like I said, that was really the mechanics of one exchange, and that it can rebound very quickly. On other exchanges, it wasn't trading at zero.
How are these exchanges regulated compared to traditional stock exchanges?
So in the United States, they are regulated. Now, a lot of the trading activity in cryptocurrencies happens on non-US based exchanges, but when exchanges are based in the United States, the only difference is they're not really trading securities. They're trading cryptocurrencies. But otherwise, they're often federally regulated by FinCEN as a money service business or on a state level as a money transmitter.
Does this at all dampen some speculation that Ethereum could overtake Bitcoin in short order?
So I came on here actually about a week ago and said that I gave it till the end of 2018, and I would probably stick with that. So while I think there is definitely a pullback here in the short term, I remain long-term optimistic around the developer community built on top of Ethereum, that blockchain will enable new types of technologies and behaviors that the world has never seen.
What are analysts in general speculating on prices going forward?
I think the people that are deep in this space remain all long-term optimistic. Although there is always short-term volatility in this space, I and others have been in this for a very, very long time, and there's been volatility the entire way. But the long-term trend here has been substantial growth.
Now, one of the things we've discussed is that a lot of the traders of these cryptocurrencies are amateurs. Tell us about that and how it affects the way this plays out.
Yeah, so I think something that's really interesting about cryptocurrency is that most of the investors and most of the participants are not from Wall Street and they're not from Sand Hill Road. That is to say, they're not traders in public markets, nor are they venture capitalists in private markets. They're really computer scientists, technologists, and other types of early adopters on these platforms. So the value accrual here is going to a completely new group of people that's very atypical for investments you might see in private companies or public companies.
So should anyone be betting their kids' education on Ethereum or Bitcoin right now?
I think the asset class remains risky and not more than you're willing to lose. But I do think cryptocurrency offers an amazing diversification away from traditional assets.
So 10 years from now, what does this sector look like?
Well, I think 10 years from now, the market cap of all these assets combined is clearly into the trillions. And I think that these technologies will have fundamentally transformed major sectors of our economy.
So this is bigger than Apple,
This is much bigger than any specific company. This is as big as the internet.
Polychain Capital founder and CEO Olaf Carlson-Wee there. Coming up, Chinese telecom giant ZTE ranks 4th in market share in the U.S., but has big plans to expand its footprint here. We'll hear from the CEO of its mobile devices unit next. This is Bloomberg. Pandora CEO Tim Westergren is stepping down from the company he founded 17 years ago. The music streaming service has been facing growing losses and struggling with a strategy to combat the rising popularity of other on-demand services like Spotify. CFO Naveen Chopra will be named interim CEO while the board begins a search for a permanent replacement. We spoke to Westergren last July about the state of the music business and growing competition.
We've been signaling that we expected to be flat for a while, and really we're surrounded by sort of a glut of these free on-demand services that we can't sort of directly compete with yet. We're on our way to do that. We're building new products that are going to address that. But I think the growing engagement is a really positive signal for us. So our core listener base listens more and more. We just crossed the 24-hour-a-month threshold.
Earlier this month, satellite music company SiriusXM said it would invest $480 million in Pandora in exchange for a 19% stake and 3 seats on the board. Well, Chinese telecom company ZTE has emerged from a $1.2 billion fine from U.S. regulators with a new international game plan. Bloomberg's Rashad Salamat spoke with ZTE Mobile Devices CEO Cheng and asked him where he sees the growth opportunities ahead.
Our strong growth market is America, China, Europe, and Asia. In North America, particularly in the U.S., we are solid number 4 in terms of market share. We have now above 10% market share over there. We will continue to grow the business over there. China being the most competitive market, and it's very important for us. So now we are going to display the security phone at the Mobile World Congress here in Shanghai, and you will see that we will demonstrate the leading encryption technology in all 4 layers, on the chip, the hardware layer, system, and platform communication layer. So those things will differentiate us into the business and also public service sectors.
ZTE Mobile Devices CEO Cheng. And that does it for this edition of Bloomberg Technology. On Wednesday, Gene Munster, Loop Ventures co-founder, will be joining the show to discuss his report predicting Apple will roll out AR glasses by 2020. And Bloomberg Tech is live streaming on Twitter. Check us out at Bloomberg Tech TV weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. That is all for now. This is Bloomberg.